yesterday. I guess the Broncos
Don't
are
want to talk
real,
about
huh?
it. Don't want to talk about it. It's too.
You don't want to talk about it.
5 minutes into the second half, it was like we're going to the Super Bowl, and then we lost 5 players in 5 minutes, and I was like, okay, that was just. The coach was crying in the press conference. It was a disaster. It was a disaster.
To my world, bro. Welcome to my world.
I have a ticket. I have a ticket. The Pack to win the Super Bowl for $2,000, 22-1. I just was like, just watched it like disappear in my face. I was feeling really good about that.
Oh, it's not over. Come on, you got a shot. That's a tough team.
I think Mike Parsons done. I think he blew his ACL. Like that's a big deal.
Yeah, kind of. And it looks like Mahomes is out too.
Yeah,
they
were done anyways. They were done anyways. It's the official end of the Taylor Swift era in NFL, which that was a nice little tourist one. I think that's enough. That's enough. They did a lot of winning though, the Chiefs. That was a good run they had.
All right, and last NFL comment. How about Phillip Rivers? How fun was that?
That was amazing. As a 44-year-old guy, I thought that was amazing to see another 44-year-old guy get off the. That's like me being like, okay, I'm gonna go play football.
Coming off the
What are you
couch.
talking about?
Let's go.
Speaking of 44-year-old guys getting a second chance, will the Michigan coach get a second chance?
Oof. David's trying to put that one out there and see what we do with that.
Exactly.
I'm not fighting on that.
Second chance with who?
That guy, he is so done in so many ways. Like he just blew a great job. I mean, multi-million-dollar coach for a bunch of boys, and all you have to do is point in a direction and blame kids. And what a dope! What a I don't think there's no one.
And he blew up his family.
Strategy there.
Yeah, he's just not thinking. All right, let me repost this and we'll get the show on the road. Sorry we're late, everybody. We had some technical difficulties this morning. It's cold and dark in California still, so maybe that's the problem. Let's see.
It is not that. Yeah, it's a little dark. William Blair.
More sunlight in LA in the mornings than in San Francisco, bro.
Is that right? Just a little bit? Like, can it really be that much though? It's not that far.
Fractional.
North.
Yeah, a little bit.
It's not like you live like in Upper Canada or something.
Well,
I'm just saying.
Our politics would make you think that. But we won't go there.
We're closing in on the solstice. Isn't that when we start to get more daylight every day? Like we're moving towards spring at that point?
Like next week,
No. That's after. The darkest day of the year is December 22nd. That's what Christmas is.
Yeah, and then it
literally
turns
is when the sun starts going up. It's the sign of new life, basically.
Right. The point is, isn't that when it starts to turn to more light every day?
Right.
Christmas, yes. But not yet, though.
So we all agree. I don't know why you're disagreeing.
I think Ben skipped that. Ben skipped that class.
We're getting darker right now.
Well, we know
Every day gets darker,
right, Steve?
What's that?
We know how athletes are. He probably didn't even have to go to class.
Yeah, that's true.
I would take my math classes skills in record against anybody on that, buddy. But
those basketball players at Wisconsin, you got to watch out for them.
I wasn't a big chemistry guy. Put it that way.
The easiest person to bait ever. I'll take my math class and let's push-ups. We'll do push-ups.
Yeah,
all right,
well, he's the young buck in the crowd too, so he can flex.
Look, I'm still just mad about the Packers, so let me stew a little bit in that.
I can say as an analyst, all I had to do was multiplication, division, not even division, subtraction. Start at the top, subtract. That's all you have to do.
Yeah, it's not complex math.
Nope.
All right, let's get this show on the road, boys, because we're running late. Sorry we're late, everybody. Welcome to Wall Street Beats. I am Steve Lamar, joined with our macro pro, Benjamin Brey, and our healthcare biotech and Japanese stocks pro, David Maris.
We'll
He's
take
got
that.
he's got a basket. He's got a basket.
We'll take that.
So what are you guys thinking about this morning? Friday's sell-off looks like I don't know. They tried to bounce it this morning and then not. What are you guys thinking about this market here today, Ben?
Looks like AI stocks are once again good and pretty drilled. I'm looking at the 5 to 10% down for a lot of the same kind of like very speculative stuff. Crypto. Actually, you know what? I shorted Bitcoin in an offshore Binance account this weekend. This is the first time I've made an actual on-chain trade in that in years. It looked bad, and I think it is bad. I did see that the MicroStrategy, the sailor, dodged the bullet of getting kicked out of the Nasdaq on Friday. Unfortunately, that seems a little BS, but that thing's sub 170. Yeah, I don't know. The Bitcoin was basically facing a situation where over the weekend it sounded like one of these over-the-counter brokers was facing some liquidations, and you're just hearing more about liquidations and deleveraging and a lot of this stuff. And that's just not
There's
usually
this thing called margin.
when you have no cash flows or yield to lean on, and you're just hearing about liquidation. If you saw some kind of pattern that made you feel like, okay, that was it. But that does not how it feels like or what it looks like in any of this stuff. This looks like guys are just one at a time getting taken out. I mean, let me give you an example.
Where does strategy? Where does Sailor start to have to sell, Ben? At some point, he has to become a seller. No, I think I saw a number under 70,000.
I don't think he. What do you mean? He doesn't have to sell.
So Steve, I think I know what you mean. I think someone had said 82,000 or 80,000, something like that. That's where he just has to. It's forced selling. So.
Well, no, he's not forced selling. It's not like he has to make the payments.
He's got to make some interest payments, right?
No, not interest. Dividends, right? So he has preferred stock because his convertibles. He used to have this 6% convertible that was actually interest. He's got a very minimal amount of interest on those convertibles, and the guys who did those deals, they did well. And a lot of that stuff, I mean, not as much now, but at some point was trading well above face. And so that was a creative thing that he did. But I don't understand this whole business of going and getting all these preferreds, and he has $750 million that he's got to pay every year. Well, you got $60 million in EBITDA, and you have to pay $750 million in cash flows. And if you don't pay these guys, and you start giving them dividends in arrears, let me tell you what happens in preferred stocks. Remember last year? Fannie Mae preferred. Remember, guys, I like to talk about that. It was my favorite trade on the Trump thing. Got involved in it it got to $1 or $2. That's what happens to a preferred stock, the $25 par when you stop paying the dividends. The guys are like, I'm out of here. And it goes completely to option value. And I would think that would be the same thing. And he'll get completely cut off from the capital markets. So I don't know if it's the same as forced selling, the way you're saying it, like a true finance, hey, we got to liquidate everything type of thing. But if he wants to keep the trade going, then yeah, he's got to sell. And he did come out and say that I'm going to sell Bitcoin instead of stock when Bitcoin's, or when the NAV or the MNAV is below 1, as he should, because it's dilutive, right? There's nothing. Only a Greek shipping company would be the kind of guys who would do that to you.
Right.
But
all right. So
I mean, look,
you're short Bitcoin.
I shorted Bitcoin.
Are you short the sailor?
What?
Are you short the sailor?
I have puts on that, but I bought those last summer. So I guess technically, but I'm not short the actual underlying spot stock in that. I mean,
got it.
I just think that this Bitcoin thing's just a trade. I think that let's see if we can flush it out to 75K and see what happens. And if it breaks there, then it's 50K. and we'll just kind of ride it a little bit here. And I don't know. I mean, my gut is that this market is tired, but the whole rotation thing seems to have some legs still. It's like we're selling tech and
Buying Russell.
Buying even healthcare. Although David, we finally got the correction in the healthcare. It was turning to be from the XLV to actually just called Icarus because it was going vertical. Needed to come back down a little bit.
Yeah, I needed to rest a little bit. I'm not worried about it. So,
did you add, David?
I didn't add. I mean, I added to healthcare names, not to the XLV and the XBI. I mean, I think that if you think so, right now, and one of the healthcare specialists sent around a chart. If anyone's interested, I'll send it around, but just ping me. But it was the allocations of hedge funds and mutual funds to different sectors, and we just hit like neutral weight for healthcare, at least according to this data. I will say that the catch-up trade is not over. My guess is that everybody's playing it, and it's not surprising that even the Nasdaq, when they're doing their rebalancing, which is, I suspect, is way more political than it is like, hey, let's really analyze this. 2 of the 6 companies were biotech companies, and I think to your point, the reason MicroStrategy or strategy wasn't taken out is that it's a lot of volume, it's interesting for a lot of people, and they don't want to cause some calamity. It doesn't fit with a company that should be in the Nasdaq 100, but whatever. Or in the Nasdaq index for that matter, but we'll just leave it at that.
Exactly.
I mean, I'm looking right now, and it's like, the average cost is, a little bit under 80K, and they got 50 billion market cap and 8 billion in debt and 8 billion in preferred. So, they're not like at imminent, like coming up against those fixed claims, but like this just has like very much implosion written all over it, basically. I mean, it's the classic Ponzi scheme of like, hey, money's coming in and then it's working well on the way up. It can issue equity at a premium when volatility rises, etc. But then the other side of what our partner Jeff Mackey calls the Christmas tree of death, which guess when he learned that? The .com. He was drawing those things during the .com, and you know what we see a lot of lately? Christmas trees of death, just like we saw in 2021, and that's just a classic sign of bubbles where you have securities that go to places they never belong to. And sometimes it can be a real company even that gets too excited. If you guys remember Abercrombie last year, that did that, goes from $30 to $180 back to 60. Now it's having a little rebirth, but like, this is a crazy market. And so, it's not, although, by the way, David, speaking of real quick, I want to give you big flowers on Teva. How about that one, buddy? You were on that just for a year on this program. Well done. Well done.
Thanks. Just about to cross 30. So let's, I'm still there. I haven't sold any. Start to get to 35, 30 something, maybe I'll sell half of it, but it's, it's a great execution story. So yeah, thanks.
And more like, Hims was this growth story and some of these kind of stocks, but that was like just a cheap, really good business that was like, hey, you were sitting on something and then you had a really good stock. So
it just needed some execution and they nailed it.
Yeah. And then you get some positive momentum and then you get some new money comes in. That's just kind of how it goes, right?
Yeah. I mean, it's lots of ways to make money, right? So you can do it value based. You can do it on, I want to own the winners and I'll pay extra for it. And, I try to do a barbell of that and, but everybody on here does it differently. So.
Yeah. Well, no excuses or no reason to make excuses for winning. That was really good. I guess last thing I'll say, and then I'll let Dave run with it, is that like, we have options expiration this week, and the BOJ's on Friday, and now we can actually talk to our resident Japanese expert, David, who's picked up some Japanese stock.
Konnichiwa.
Japanese are going to start buying stock or selling stock.
But those guys are going to raise rates, and anytime Japan raises rates, because they've been such a liquidity provider to the world, it's worth paying attention to. Their long end of their curve has been forecasting this, and the way that their culture is and the way they work, they move slowly, obviously. But that is, if you wanted to be, a lot of people are dollar bears, and I keep asking, like, where is going to absorb this if China's not going to change the peg? In Japan could be one place. They're actually seeing some economic growth, and they haven't for a long time. But the one thing that I would say, and I just did a report on this to some people, is since the 1990 crash, they've had 3 periods when Japan's economy actually had any semblance of GDP growth. It was in the late 90s, or 96, 98. So I don't know if you call that late, it's like pre-late, whatever. Abenomics during 2013 to 2016, and then since 2022. And each of those periods saw a 50 or 60% decline in the yen. So as a country that imports 100% of its energy, it's a little part of that, right? And so if they start, maybe that's why they're reticent to start raising rates and get too aggressive, because then, the yen starts working and their little, boom of growth kind of goes the other way. So it's worth watching, paying attention to. But let's let David, though, tell you about his Japanese stock expertise now. Now he's branching out from just being a healthcare expert.
Well, back in the day at Balyasny, I did run a Japanese pharma portfolio that was separate. So I give Dimitri a lot of credit, because I went to him with an idea, which was, hey, things look really cheap, especially in Japanese generics. And he goes, well, how much do you think you need? Could we do $50 million, $100 million? Like and that was when they were a lot smaller. And so just a real, to be at a hedge fund where they really champion ideas. So, was great. I will say, so if we talk about a month ago or 3 weeks ago, I said, hey, I'm going to do this portfolio of Japanese stocks. They're going to be some healthcare, some not, but they're going to be for a weaker dollar. Now, I want to own good companies. It's not just like, and so
Right.
I bought kind of a mini index of companies, and I would love to know these companies better. Some I know really well, like Sawai or Fuji Pharma or Towa, which are generic drug companies. A stronger yen is good for them because they can buy any ingredients better, but also that it's just a domestic. So you look for domestic demand companies. The only outliers are so I have 2 banks, Mitsui and Mitsubishi, and then a bunch of companies that are, and so Chugai, Shionogi as the pharma companies, cheap pharma. As I think people continue with the healthcare trade, they're going to look for where's cheaper healthcare. Some of the names like Lilly are pretty expensive. Well, I'm going to look around, and I'm going to find that here are companies that are trading pretty cheaply relative. But then you get things like Kewpie, which makes mayonnaise. They make a fantastic mayonnaise. They're like the Heinz of Japan. Ajinomoto, which is a spice company. They just make spices, and so these are, I can go and bore you with all of these. There's a bakery company, Yamazaki Baking. They're the number 1 bakery company. And so you look for these, and if anyone's interested, I'll give you the list of this. Do I think that you should trade? Okay, I think that the yen is going to get so much stronger that I'm going to sell my U.S. Companies for this. Look, the U.S. is where things are happening and where the growth. I mean, it's great growth, but I want to own good companies otherwise that are here in Japan. I did want to talk a little bit though about a couple other things. I mentioned already the 2 additions to the NASDAQ being 2 biotech companies, Alnylam and Insmed, both great companies. I don't trade stuff like that. Like the people, the funds that do that are so much faster than individual investors. Like, don't try to think like, oh, they were added to the index, I'm going to buy it today. That's a tough game to win on. But then if you think about what's going on in obesity, so today a lot of data came out. Every Monday, prescription data comes out, and then the healthcare specialists send it around and they say, here's what we read through the tea leaves. But this week was actually one that that caught my eye, because what you see in the and I'm going to scroll to the exact data, but if I can find it, the good is that Zepbound vials are now about 32% of the Zepbound TRX. I say, okay, well, what is that? That's so Lilly launched these vials to overcome the shortage, but also to get people to buy it at home because it's only available online. And so you get the vials and you, at least I think they're only available online. Maybe you can get them in the pharmacy, but you are going to self-inject, sort of like what you do with a compounded drug, and it's cheaper. This way they can have two-tiered pricing really for the same drug. Well, the fact that it's ramped up is kind of negative for Hims, because it tells you that a lot of consumers are going that route. Now that the drugs are cheaper, more people are going there. Now, we don't know the data from Hims. Maybe it's making it so popular that the rising tide lifts all boats, but you can kind of see on the Hims stock today, that's really not what the interpretation is going. So I'm still waiting there. I think this data is important to keep an eye on, not because, not for anything other than, listen, where is that mix going to? The week to week, the weekly growth was something like 20%. So the prescriptions are rebounding really well. People are still using GLP-1s. And it makes you think of, well, who's going to, I mentioned earlier, when you think of, I want to own winners, I'll own expensive winners. So Lilly and Novo really have won this category. If a new drug comes out, it has to be so much better. I own a Japanese company called Acletus. They had good data for an oral drug where they lowered fat by or weight by like 8%. Well, 8% is not 25%. So you can have an oral drug, but if you're not losing weight as fast, that's going to be a niche product. The stock kind of reacted that way this last week. So it's an interesting thing to watch.
So you're sticking with Lilly and Novo, and you're cautious on Hims, sounds like.
Still, yeah, still there on that. And let's see. Oh, flu. So the flu in Europe right now is off the charts. And so you think about the US, and right now we're higher than we were last year, not like a blowout, not like a lot of flu, but it's catching up. And sometimes what happens, in my experience, what you see is, people don't, the flu in Europe comes to the US, as we saw with COVID and the rest. Things travel. And so we may not be having the same impact, the same outcome as the UK right now, but could it just be delayed? And so, if you think about what's a good flu trade, if you wanted to play that, I'm not there yet, so I'm thinking about it. But that's some work that I did this weekend of like, so you have Sanofi and Pfizer are the big flu vaccine makers, and Moderna. But all the flu vaccine is sold a quarter ago, 2 quarters ago. So those stocks might do well because people go, oh, the flu, who makes the flu? And then you say, well, the flu vaccine is really small for Pfizer, or for Sanofi for that matter. You rush after these and maybe you have a trade, but that's not really the business. It is negative for hospitals. So people who are running around for the managed care in the hospitals, maybe you want to think about what the losses are when people start being hospitalized. There are a couple more speculative names like Quidel. They make testing vials. Abbott does as well. So that could be something to think about there. Or CVS.
So a flu trade in general, though, just sounds de minimis. I mean, is it
no.
really
I'll say,
is it really a trade?
I've done it
Yeah.
before, and it can turn out to be great if things are really bad. So you don't want to be too happy that, but
Right.
that's
People are getting
the business
sick.
the business that we're in is kind of, what happens to the stocks.
Right.
No, you can catch it early, even for some of the big companies. You can play this, and I would say right now that's not in people's on people's bingo card of like a really bad flu. So are you going to be, how wrong are you going to be if you were to buy one? If you buy a speculative name like a Quidel, maybe you could get hurt by it. But if you bought like a Pfizer and a Sanofi, and you're not going to. I don't think I would expect to get hurt by that. And it's probably it's not a bad
you got
trade.
a little upside. You got a little call upside. Yeah.
Yeah, especially if you want the exposure to healthcare anyway. And so I still think that the XBI and XLV are going to be great next year, at least for the first half of the year, for what we can see. And that's about it. That's about what I wanted to talk about.
All right. Ben, anything to close on? Anything? What are you looking at this week? Anything? Any macro stuff kind of on the calendar that could be a catalyst besides what's going on?
Just
in
what
Japan?
I said: option expiration and BOJ. I mean,
yeah.
There's like. I watched the bond market, I guess. This is the first day we've seen a little bit of green in the bond market. There, last week it was getting a little ugly. We had a hell of a bear steepener on Friday, which
the long end. Yep, for sure.
I don't know, man. I think the reality is that we're getting close to the end of the year, and there's a lot of this year that reminds me a bit of 2021, in the sense that like. I talk to buddies who run funds, and they just want to get to January. And like, there's guys who have loads of stocks they want to sell, but they want to sell them in January. And so I think some of what's happening with this implosion in these spec stocks is guys front running that a bit of like, well, I'm not waiting. You know what I mean? Because who knows what it'll be then? Because everybody's trying to game the tax bill. So there's that component. I think it's been an exhausting year. If we think about how this year started and all the stuff going into Liberation Day, and then we had the dollar dump and the vol dump, and then you get this all-time high rally, and now it's kind of like feels like it's running out of gas, but we're hanging in there because even though stocks are down, I mean, what's the S&P? It's like 6,800, right? Something like that.
Yeah,
I mean, it's still pretty high. 4,800 in April. Right, so I don't know.
Do you have a view on Supreme
I totally
Court?
Agree that I talked to two different portfolio managers this last week, who, with the S&P 500 up 16-17%, it's been a great year, and in healthcare, it's been a great year. So they're looking to just pack it in. One was one had a blow up last week, and it wasn't a big blow up. And he said, well, I yelled at my analysts, like, what are we doing? We're done for the year. Why are we playing these
Why
things?
are we there?
Yeah. And I think like everyone has that same feeling of just like, okay, let's get to next year. Why am I swinging so hard? I wanted to mention that I did buy 3 stocks this last week: EBS, Emergent Biosolutions, Halion. I bought a little more Halion, HLN, and Amphastar, which is a generic company, AMPH, just a small bit. That one's going to be volatile. But
isn't Halion already a pretty big position for you, David? I recall.
Yeah. One of the things that came out of the Japanese thing is I looked at a consumer products company, which I did end up buying, but it's a good 8 multiple points higher than Halion, and with a worse balance sheet. So I was like, well, why am I
multiple expansion?
Yeah, exactly. Why would I go overseas, get all this currency risk, get this company I don't understand when they put out their annual report, I have to translate it all, and all of this trouble for a multinational? They are a multinational. They're like a Procter and Gamble of Japan. Why would I do all that? I did it anyway, but when I can own a really great quality company that's a slow growth but defensive name like Halion. So yeah, I do own a lot of it. But I sold some Nintendo, so I have the money to do it. So
All right. All right, boys. You want to wrap it up? Good show.
Yeah, I think that's probably a good spot to wrap it up. Good Monday show, fellas.
What are you going to have for a midday snack today?
Hang on, I'll tell you.
Oh, an Einstein bar, our proud sponsor.
And these are coming to Costco. Did I show you? Did I show you these guys? Can you see?
Oh,
them?
wow. That's great.
That's an 18 count going into Costco next month. Anyway,
everybody likes them.
Everybody likes them.
Yeah, I gave a box to my trainer. She loved it. She went for a run right afterwards. Said like she loved that it was light, but then she put a box in the break room, and she said it was gone in an hour. And so a box that size is a good one for them. So.
Yeah, exactly.
Yeah, they go fast.
Bigger packages.
They go fast. You're like, hey, I'll have one in the morning or whatever. Like, yeah, you could eat those quick. Good for the holidays to put out. People instead of snacking on some garbage, just have a little Einstein bar.
Yeah, exactly.
Indeed.
Instead of buying, I'm going to buy a box of donuts for the office. Buy a box of Einstein bars. Do them a favor.
That's the thing. People still buy donuts for the office. Oh man, I could go for a donut right now. I haven't eaten a donut in years. I would love a donut. What's your favorite donut, David?
I haven't had a donut in a while, but
Krispy Kreme. Don't you remember those Krispy Kreme donuts? Those glazed.
Who could forget?
25 years ago, they were good, David. Huh?
Yeah, no, I passed on I was never a fan of the hot donut. Like I just
okay.
So, but what is it? The chocolate, whatever the Dunkin' Donuts chocolate one is called. Like it's like chocolate all the way through. I forgot what it's called.
I'm a sugar donut guy.
I like the old fashions. I like the old fashions.
All right, that's enough.
All right, boys, let's wrap it up.
Yeah,
let's let everybody go. Thanks for joining us on Wall Street Beats. I'm Steve Lamar. Thank you, Ben Brey. Thank you, David Maris. Follow us on wallstreetbeats.com and on passes.com/wallstreetbeats, and we will see you tomorrow. Have a great day, guys.